All right, now our next guest says that the key to these markets is keeping your expectations modest. I want to be joined now by Jim Moffett. He manages over $6 billion at Scout Investment Advisors. His Scout International Discovery Fund has outperformed 82% of its peers year to date, and he is our guest now. Good to have you with us, Jim.
Good to be here.
So what's the thesis right now? How do you see what's going on in the marketplace? We've got the quantitative easing, the Federal Reserve agreeing to put in about $600 billion into the kitty, and the stock market seems to like this number.
Well, money tends to make markets. And so that the money flowing in will help the markets here, will help the markets around the world. Some of the money will flow out to other parts of the world. That's one reason the dollar is going down. And that's the normal progression, is that money goes in, the markets go up, and then in response the economy will respond somewhat. We're modestly optimistic about the underlying market, but we think, or the underlying economy rather, but we think the market will do fairly well over the coming year because of the stimulus and there's money on the sidelines. Everybody's fearful, and at some point after going up enough, people will get enthusiastic about it.
Now, you're enthusiastic about three stocks that you want to focus on, and they're all outside the United States. You've got Fanuc, which is a industrial robot maker based in Japan. You've got AmBev, which is the big brewer. That is the division of InBev. It's based in Brazil. This is the Brazilian operation. And then also Luxottica, based in Italy. This is the global eyeglass maker. Is there a theme to all of these particular stocks? We'll do individuals, but I'm just wondering if there's an overriding theme to how you select the companies.
Well, the theme is, in a sense, that the country doesn't make that much difference. I mean, there's a lot of discussion in macro, and as an example about Europe, and Europe's going to pot and all of this. Luxottica has done well for us. It's in Italy, which is one of the places it's not as bad as, Ireland, so to speak, but it's not as good as Germany either. But it's a good place to do business. Fanuc in Japan is a similar story. Japan is kind of limping along, but there are parts of Japan that are doing well. In their case, by making the machinery you're talking about, and a lot of those exports in turn go to China. China is buying this stuff as they're going up the industrial ladder, so to speak.
And so exports from Japan to China increasing.
Exactly.
Of these types of materials, of these types of robots.
And so the company does well, almost in spite of being Japanese. One of these days, if the Japanese currency goes down, it'll actually help them even more. AmBev's a little different story. That's just a quality, consistent growth play within Brazil that we think is going to continue to do well. They've got a stimulus obviously coming from raw material sales to China, and I guess that ties into the Fanuc story a little bit, that the people are buying the beer there, but the economy is prospering.
And also the thing about the economy and the people having more money is not only do they drink beer, but they drink higher priced beer, which helps the margins.
Yeah.